In this video, we're going to explain how to do task 8 from AAT sample assessment number 1 for personal tax. Task 8 is about capital gains tax, specifically the disposal of shares. So we're provided with information, so let's have a look at this. Mr. Q holds shares in QTT Limited and has made a number of transactions over the years. Details of the transactions are, so there is our table with the various purchases and sales of shares. And then let's have a look at the requirement. Calculate the gain Mr. Q made on the sale of shares for the 24-25 tax year, clearly showing the balance of shares and their value to carry forward. All workings must be shown in calculations. Enter your answer in whole pounds only. You've been given more space than you need. So we've got this table here, and there's plenty of space here available. So this question is human marked. So it's important that you set out your answer nice and clearly so that the human person looking at it can understand what you're trying to do. So you've got 4 columns in our table here, and we'd recommend that you use 1 column for the date, 1 column for any workings that you want to do, 1 column for the number of shares, and 1 column for the cost. So this will help you to set out your answer in a nice, clear and easy way for the marker to follow what you're doing. So if we have a look at the information then, so the first event that we have is on the 4th of April 2005. So we can put that straight into our date. And then we're told we've purchased 800 shares at the cost of £18.20 per share. Okay, so we can put in here our purchase, and we bought 800 shares multiplied by 18.20. So in the shares column, we can put the 800, and then the cost, well, 800 multiplied by £18.20 gives us 14,560. So there's the first transaction. And then we can move on to the next row in the table. So on the 16th of September 2007, we received a 1 for 5 bonus issue. So let's remind ourselves what a bonus issue is. This is a mechanism for companies to reward their existing shareholders. And what they're going to do, they will give free shares to the existing shareholders, but based on a proportion of how many shares they have at the moment. So this can be a good way of rewarding the shareholders without any cost to the company, because they could pay dividends, for example, but that requires a cash outflow. But in this case, they're giving extra shares to the company, to shareholders, and that keeps them happy. So in this case, we've got a 1 for 5 bonus issue, which means that for every 5 shares a shareholder has at the moment, they get 1 more for free. So we're told that this happened when the shares had a market value of £22 per share, but we don't really care about that market value because in our table we care about the cost. So how much did Mr. Q pay for them? Well, they're bonus shares, so he paid nothing. And so we have a 1 for 5 bonus issue. So we need to work out how many shares Mr. Q received. So we take the 800 shares we have at the moment and divide by 5, and that tells us that we received 160 shares and they cost nothing. So having put that line in, what we want to do now is do a subtotal, because these subtotals are going to be important for every time that we have a disposal. We'll need to use those subtotals. And so we just need a running total of how many shares and what is the running total of the cost. Okay, so we've dealt with the second row in the table. Let's move on to the third row now. So we know that on the 9th of May 2010, we sold 200 shares. So we have a disposal. Now we don't need to work out the tax on this disposal because the question was specifically asking about the 24-25 year. So we have a disposal now. So we dispose of 200 shares for £28 per share. So let's put in the minus 200, that's the number of shares we've sold, but we don't really care about the £28 per share, the proceeds, because remember we're not working out the gain now. So we do need to work out the cost though. So the way we're going to work out the cost, we're going to do this on a pro rata basis. The complication we have is that we've got these 200 shares that we're selling, but some of them could be part of the 800 we bought originally, and some of them could be part of the 160 that we received for free. So what we need to do is work out what is an average cost of those shares. And we're going to use the subtotals to help us to do that. So remember, we're selling 200 shares now out of the 960 we have in total. And then we're going to multiply by the 14,560, the total cost we have. So that gives us our weighted average cost of those shares, which is minus 3,033. Remember, the question told us to answer in whole pounds only, so there's a bit of rounding going on there. Okay, so remember that was taking the 200 we sell out of the 960 we have in the immediately preceding subtotal, and then multiply by the subtotal cost of 14,560. So having put that line in, let's do another subtotal now. So we've got 760 shares remaining with a cost of 11,527. Let's move on to the next transaction. So this is now on the 20th of March 2015, where we received a 1 for 10 rights issue. So how is this different to a bonus issue? So a bonus issue is where we give shares for free to our shareholders based on a certain proportion. Well, with a rights issue, we're now going to sell shares to our existing shareholders, again, based on how many shares they have at the moment. And typically a rights issue is sold for a figure that is less than the market value as an incentive to encourage the shareholders to buy those shares. So it's a good way for companies to raise finance. So in this case, we've got a 1 for 10 rights issue, which means that for every 10 shares we own now, we can get 1 more for free. So that means we're going to take the 760 shares that we have at the moment and divide by 10, which means we're going to receive 76 shares. So let's put that in our workings. So 760 divided by 10. And then we know we're going to pay £20 per share for each of these. So if I multiply this by 20, that will also give us our cost. So we'll have a cost of £1,520 in this case. Okay, that's the 76 multiplied by £20. So let's do our subtotal. So we have 836 shares now with a total cost of 13,047. And then we have our final line in our table. So on the 10th of August 24, which is in our current tax year, okay, we have another disposal. In this case, we're selling 350 shares. And we're selling them for £40 per share, but that's the proceeds. Okay, so we need to be careful we don't put that in our cost. So what is the cost? Well, we have to do that in the same way as we did previously. We're going to work out what is the weighted average cost of those shares. So we'll take the 350 shares that we're selling and divide by the 836 shares that we have in our subtotal, and then multiply by the 13,047, which is the running total of our cost. So that means that those 350 shares have an average cost of 5,462, again with a little bit of rounding going on there. Now the question did tell us to show the balance of shares and their value to carry forward, so we do need another subtotal here. So that means that we have 486 shares left with a running cost of 7,585. So there we are, that's our shares and cost for the various transactions. The last thing we need to do now is work out our gain on disposal, or possibly loss on disposal. Okay, we don't know yet. So we're going to start off then with all these capital gains questions. We have our proceeds, and then we deduct our cost, and then that will give us either our gain or loss. So what's our proceeds? Well, remember, we sold 350 shares for £40 per share. So we can put that into our workings. We have 350 multiplied by the £40. So we have total proceeds of £14,000. Now, what about our cost? Well, the cost comes from the table that we've been working on so far. So remember, we're selling on the 10th of August these 350 shares, and we worked out that our weighted average cost was £5,462. And therefore, we do have a gain in this case. We have a gain of 8,538.